Welcome to the Iraqi Dinar Hub, your dedicated space for developments surrounding the Iraqi Dinar, Vietnamese Dong, and Zimbabwean currency movements. Today marked one of the most unexpected and electrifying moments the alternative currency community has witnessed in years. Precisely at 12 a.m. Eastern Standard Time, a wave of unusual digital flashes swept across the internal financial systems of several major U.S. banking institutions. This was not a localized glitch or a malfunction isolated to a single region or server cluster. The phenomenon appeared in multiple Tier 1 and Tier 2 banks almost simultaneously, piercing the quiet midday routine and instantly setting off alarm bells among closed system monitors. Employees within large banks, including recognizable giants like Wells Fargo, Bank of America, and Fifth Third Bank, reported that internal foreign currency modules accessible only to staff suddenly displayed what appeared to be revised exchange rates for the Iraqi Dinar and Vietnamese Dong. These reported anomalies were not minor deviations or subtle market shifts typical of standard trading fluctuations. According to first-hand accounts from within these institutions, the numbers appeared significantly adjusted, if only for a brief moment. Some employees reportedly captured screenshots before the rates vanished or turned to pending, restricted, or out-of-service statuses within minutes. The digital finance underground reacted like a spark hitting dry tinder. Telegram channels dedicated to currency speculation surged with activity, while Reddit forums associated with global monetary reform swelled with new posts and amateur analysis. Message boards long focused on revaluation possibilities lit up with excitement, caution, and intense debate over what these screen flashes signified. Some observers immediately labeled the event a major breakthrough, interpreting it as a leak of impending changes. Others warned that without official confirmation from institutions or global bodies, the flashes remain unexplained yet intriguing technical anomalies. It is important to note that no immediate statements were issued by the Central Bank of Iraq, the State Bank of Vietnam, or the International Monetary Fund regarding these specific events. Yet the coincidence of rate changes appearing across multiple banks at the exact same time in a seemingly coordinated fashion triggered widespread speculation among thousands of investors and enthusiasts. A shared question surfaced across the community: was this the long-awaited beginning of a global monetary recalibration, or merely a system test? Those who follow the global currency landscape recognize a specific pattern in these rare synchronized events. Historically, when foreign exchange infrastructures prepare for new rate structures, internal systems often undergo back-end testing. These tests can include temporary rate injections or network-level simulations to verify data propagation through multiple institutions. Most of the time, the public never sees any trace of this activity, as it occurs behind firewalls and on screens accessible only to authorized personnel. However, on occasion, especially during periods of large-scale updates, minor visibility leaks can occur, allowing data to bleed through to the front end. A teller screen might flicker incorrectly, or a rate database might fail to suppress a line meant to remain hidden. Today's flashes match this pattern of a potential visibility leak during a testing phase. According to several insiders, the rate adjustments did not appear on consumer-facing websites or major public data platforms like Bloomberg or Reuters, a fact analysts found significant. The Iraqi dinar has long been the centerpiece of global revaluation discussions, and its presence in this event drove much of the day's excitement. Iraq's vast oil reserves, increasingly stable political landscape, and gradual shift toward modernized financial governance have been cited for years as potential catalysts for a future currency strengthening. Over the last year, under Prime Minister Mohammed Shia al-Sudani, Iraq has pursued aggressive reforms aimed at modernizing its financial operations and reducing reliance on U.S. dollar transactions. In May 2025, the Central Bank of Iraq announced that preparatory work was nearly complete for establishing a unified market-reflective exchange rate. For many observers, This was one of the clearest signs yet that Iraq was positioning itself for deeper global economic integration. The timing of today's digital flashes across U.S. banking systems seemed to align with the implications of that earlier announcement. The fact that the flashes were nearly simultaneous across multiple major banks suggested an organized back-office event. Meanwhile, the Vietnamese Dong has consistently been viewed as undervalued relative to Vietnam's robust economic growth, making its appearance on the screens equally notable. Vietnam's economic rise over the past 2 decades has been steady and impressive, with strong manufacturing output and expanding international trade agreements. Vietnam's economic fundamentals have strengthened considerably, leading to repeated IMF commentary that the Dong remains artificially low, perhaps ready for a valuation that better reflects the nation's true purchasing power. Over the past year, Vietnam has implemented new regulatory frameworks to increase transparency in its monetary operations, including cross-border payment systems and enhanced compliance with global banking standards. When the Vietnamese Dong appeared alongside the Iraqi Dinar in today's rate flashes, analysts took notice. It suggested the possibility that Vietnam might be participating, if only in system testing, in a broader alignment of sovereign currencies preparing for updated global valuations. Though not part of today's U.S. banking flashes, the Zimbabwean dollar remains an important element in global currency discussions. Zimbabwe has recently taken ambitious steps toward monetary rehabilitation, including introducing a gold-backed currency model in early 2025. While the ZWL did not appear in the U.S. system today, sources from East and Southern Africa have indicated improvements in regional interbank settlement rates, with some analysts believing it may be scheduled for later integration. The global financial institutions that manage currency stability, such as the IMF and World Bank, operate through slow, methodical processes for major rate changes. However, recent country reports have placed Iraq and Vietnam in a favorable light, noting improvements in governance and monetary frameworks. The IMF's June 2025 assessments praised both nations for substantial modernization efforts, and the U.S. Treasury's latest report listed neither as currency manipulators, indicating trust and cooperation. Meanwhile, the Bank for International Settlements has long confirmed that sovereign-level adjustments typically undergo extensive private back-end testing before becoming public. That brings us back to today's events. When rate flashes appear simultaneously across multiple Tier 1 banking systems, analysts generally view them as signals of internal readiness simulations. These are not random occurrences but structured, carefully timed procedures involving numerous institutions. Following the event, several banks reportedly restricted or temporarily suspended foreign currency services, citing maintenance outages or system updates. While such messages do occur during routine maintenance, the timing aligning perfectly with the flashes added fuel to speculation that institutions may be transitioning to new system configurations. Online activity skyrocketed almost immediately, with a 300% spike in traffic to sites associated with the Dinar and Dong information. Behind the scenes, more compelling indicators appeared. 2 off-record sources, one a former IMF advisor and another connected to U.S. Treasury systems analysis, reportedly stated that synchronized digital flashes of this type are characteristic of coordinated liquidity environment tests. These tests are part of structured pre-activation procedures used to ensure readiness before new rates are finalized or rolled out. One source commented that when internal rates appear externally, it often indicates the process is entering its final stages. Rumors persisted that select high-net-worth clients received subtle messages from wealth managers advising them to remain available locally for the next 3 to 4 days, a pattern historically preceding major institutional events. For holders of the IQD, VND, and CWL, today's events served as a reminder of the importance of preparation, securing documentation, monitoring official sources, and understanding bank procedures for foreign currency transactions. Speculative modeling from financial consultancies continues to circulate with hypothetical ranges for future values of those currencies. These figures are projections only, not confirmations. and depend entirely on economic fundamentals and global regulatory cooperation. Yet the fact remains that today's coordinated flashes resemble patterns observed before previous major institutional shifts, signaling meaningful movement beneath the surface. The hours following the synchronized digital flashes brought a level of global tension few could have anticipated. Although the event was brief, its aftershocks reverberated inside bank headquarters and distant financial corridors alike. Conversations unfolded in private conference rooms and on encrypted terminals among individuals whose careers are intertwined with the deeper mechanisms of sovereign finance. In the analytical view, the world behind the polished exterior of retail banks was stirring with the unmistakable rhythm of systems being tested and aligned. Among the first to sense the magnitude of the anomaly were analysts stationed in a global interbank messaging coordination hub, a secure facility monitoring high-level currency transmissions. Supervisory teams detected unusual propagation signals across multiple EU.S.-based financial nodes, with data signatures indicating a multi-institution propagation check, a rare procedure authorized only when the highest monetary authorities near a decision point. The presence of the Iraqi Dinar and Vietnamese Dong in such a test was striking, and more striking still was the fact that the test became publicly visible. Visibility leakage was the scenario system architects most feared, as it carried the risk of igniting speculation far ahead of schedule. Inside the Central Bank of Iraq's Secure Strategy Wing, senior officials studied the flash reports, noting the geographic spread of the anomaly across at least 8 U.S. institutions. To the south, inside the State Bank of Vietnam's Central Monetary Operations Chamber, the situation was equally intense. When the SBV team received reports that the VND had appeared in U.S. bank systems at adjusted values, disbelief swept through the chamber. Data was parsed and compared to internal timelines to see if the testing phase had begun early. Private meetings took place, and calls were routed through encrypted channels to international consortiums overseeing transition protocols. As news of the digital flashes spread, social media erupted. A few analysts who had predicted such an event years in advance wrote lengthy posts explaining that major currencies cannot revalue publicly without first undergoing synchronized testing across Tier 1 banking systems. Their theories resonated with many who saw the digital flashes as validation of long-standing expectations. Within Treasury System Integrity divisions, analysts understood that a leak of this magnitude would trigger widespread speculation and immense pressure on institutions to respond. The division directors issued messages that no public statements were to be made until further analysis was complete. They needed time to review propagation logs and determine whether the system was transitioning into the stabilization and verification window, a period in which cross-border settlement engines test connections to sovereign nodes before any official rates surface publicly. Meanwhile, wealth management firms began sending out cryptic coded notices advising clients to remain accessible for the next 72 hours. A fictional sovereign rate reconciliation board, often theorized to ensure stability during transitions, was imagined to be meeting in secure facilities. Representatives from dozens of countries would participate to ensure that when sovereign currencies transition to updated valuations, the entire global financial system remained stable and synchronized. The board would review the U.S. flash incident, determining that the propagation sequence had advanced earlier than expected but otherwise indicated positive system functionality. And so as the hours ticked toward potential transition windows, individuals around the world prepared themselves not out of panic but out of measured readiness. They gathered documentation, reviewed accounts, and contacted trusted advisors, understanding that the forthcoming period would require clarity, patience, and discipline. In this narrative of events, systems were aligning, institutions were preparing, and currencies long held in speculation were now appearing in places they had never appeared before. The digital flashes were not the end but merely the beginning of a much larger sequence.